How you doing, Burned? Alrighty, gonna give it like one more minute here. Hopefully everybody had a great day. Today ultimately was a decent day. I will be posting a trade recap on IG as well here in a second. That should come out probably the moment we're done with this. Good video on the equilibrium. I sent some cues into YouTube comments. What does that mean? How you doing, Ray? All right. So looking at this, first and foremost, the biggest thing that you kind of had to pay attention to today was really the hourly time frame. So last night we did try a short here once I saw this hourly change of state delivery on the equilibrium block. Um, okay, okay, Bern, I'll check back at that. If you remember the questions, please feel free to ask them because honestly, somebody else probably may have the same question. How you doing, Shayla? All right. So we tried these shorts here yesterday, last night. Ultimately, I'm not really a fan of trading overnight session whatsoever. We did try the short pretty much off of this equilibrium block. Ended up risking a little bit more. Stop loss was at 603 or like 602.5. I think it was a 5-minute equilibrium block, if I'm not mistaken. But yeah, here was our stop loss yesterday. Originally, I wanted to target this hourly fair value gap range. Notice how we don't end up actually taking liquidity down here. We do get the change of state and delivery, but we ultimately take out this sell side liquidity down here at 581, which I guess that's all what Price was looking forward to seek. So after that, woke up, pretty much realized, okay, cool, our short just isn't going to work out. Later, what do you notice on the hourly time frame? At 3 a.m., you see this hourly fair value gap and IFVG form. So that's pretty much telling you, hey, price is now starting to shift back bullish. Now, we got the same setup like almost three different times today, pretty much. All off this same exact hourly equilibrium block. So the hourly was the biggest pretty much giveaway to what was going to happen today. Looking back at this, so our first long that we ended up taking was actually like 7 o'clock in the morning. So saw the retest here of this 5-minute equilibrium block, also paired with the hourly equilibrium block as well. So you got the 5-minute and the hourly. And anytime you do see two equilibrium blocks stack up, very likely price is going to respect it. Like very, very likely. Like you got like a 90% chance you see this type of price action occur. So we went long off of this. Our entry was down here. Wanted to target the relative equal highs. So something you'll notice that price did not actually take the relative equal highs until market actually opened. So if you look here, right here, pretty much at 820, price did not take out the relative equal highs. Now, the reason why price didn't take out the relative equal highs on NQ is because if you look at ES, come to ES, come look at ES at 820 and see what happened. Same time frame, or 830. 830 ES took out the relative equal highs, which pretty much signaled why NQ did not do it at 8 o'clock, and ended up getting stopped out because I walked my stops up to, if you look at the 2-minute time frame here, we ended up having like a fair IFEG range. Ended up walking my stops up to 629. and then got stopped out. So pretty much call that trade and let it be. And then 9:30 out the gate, we had very sporadic price action. Ultimately, when you see sporadic price action 9:30 out the gate, it's really just the market trying to generate liquidity and shake out retail. So on the 1 minute time frame, we pretty much get some massive expansions. We get a big leg down, a big leg back up to take out the relative equal highs. Wasn't really interested in anything. The main reason why is because chances are this is just kind of generating liquidity to give us a better setup. So once we saw this push down here, we did go long off of this hourly equilibrium block yet again. You can go back to the YouTube live stream and kind of watch the recap and watch it live in action, I guess. And the main reason what gave us confirmation to go long here was if you come back and let's go back into replay mode here, you're going to notice something. The biggest thing with me when I trade is I have to wait for some form of confirmation. I don't just like to take random ass entries. It's pointless. Yes, we have an hourly equilibrium block that likely price will respect, but we have no confirmation. So that's why I like to utilize the 1 minute / 2 minute time frame, because that actually gives you confirmation. So the moment we got this body close over this 1 minute volume imbalance, that right there is already signaling that, hey, price is likely to push up. And the reason why is because we're now disrespecting bearish price action. If price was going to continuously remain bearish, we would not have seen this body close above the volume imbalance. So by that happening already, that gave us a signal, hey, let's go long. So actually ended up getting filled at 608. I was just like a hair too late, so ended up just hitting join bid. And we went to go target the relative equal highs back up top of this range up here. So that was another setup that we had. And then we ended up taking one more trade. This trade ended up happening around 12 o'clock. And this is what I was saying, that price was kind of looking extremely bearish on the lower time frames. So we get this expansion leg back to the upside. And this is why I ended up taking the QQQ puts. Also followed along with this trade on options, or not options, on futures. Except I was a little greedy on the futures position. Ended up getting stopped out on the futures position, but the options was kind of disciplined on that. Futures, I wanted to hold a little longer, but, well, we never actually hit our PT. And the main reason for that also is why we didn't hit our PT. We're going to go take a look at ES in a second. You're going to notice ES took the liquidity, and that's the main reason why NQ didn't have to take the liquidity, because ES already did. So the reason why we took those puts earlier and this short was based off this 1 minute right here. Notice how the 1 minute formed this bearish equilibrium block. It offered the retest, price respected it. So if you come here and just draw this range out, yes, it's only a 1 minute, but sometimes the 1 minute can actually be very powerful. But you also have to see some other things line up on different time frames. So looking at the 1 minute, what do we have? This 1 minute equilibrium block. I ultimately waited, and then once I saw the retest here at 1206, or 1208, that's where we took our position here. We entered options a bit earlier because options, you kind of don't need the best entries. But when it comes to futures, I do like to be very, very precise. So decided to go short here. Ideally wanted to actually target these relative equal lows down here in the lower time frame. Or not even those relative equal lows, this low down here. So I wanted this internal sell side liquidity at 603. Ended up trimming pretty much all of my position here on options once I saw this push down, but I did not actually hold my position on, or added to my position on futures, and that's kind of what ended up costing me a little bit of money today. Easily should have been like a 10K day and only ended the day up 4K. But here's what happened. We got this push down. We never actually took sell side. And the reason why we didn't need to take sell side is because if you come look back at ES during the same time frame, what does ES end up doing? Notice what ES does at 12 o'clock. So we take this sell side here at 12, and then look what happens back here at 245. 245, we end up taking this low yet again on ES, and that's the main reason why you've seen the higher low form pretty much right here. And then now currently we are seeing a lot more expansion to the upside. We probably are going to see a lot more upside to come. Pretty much if you look at the 8-hour time frame, 8-hour time frame actually gave you a really clean setup. I just wasn't aware of it. But notice here we have this IFEG and we also have this perfect 8-hour equilibrium block. Notice what price did. Came back to it, gave you the retest at 10 o'clock, and here we are now. Okay, your great video, Zeus, but I have two questions. Is it always 3 candles and then an opposite candle, or can it be 4 or more candles or 2? So when it comes to equilibrium blocks, that is a great question. So oftentimes, if you see it's more than one candle, chances are it's just an equilibrium block on a different time frame. You just have to go out and find that time frame. So here's a good example right here. If we look at this range back from, what day was this? July 5th. We know this is an equilibrium block. This is based on a 5-minute time frame. If this thing clicks, okay, cool. So we know this is an equilibrium block on a 5-minute time frame. If you want to, you can even extend that down here. Now, if you come here to the 10-minute time frame, there goes your equilibrium block. So it's just going to come down to what time frame you were watching. If you were watching the 5-minute, just understand that what an equilibrium block looks like on the lower time frames, to where just in case you're not actually trading the 10-minute time frame, you can still comprehend that, hey, these 5-minute candles just formed the equilibrium block as well. And then the only time I really wait for it to be 4 candles is if price is pretty much even and you don't have the full breakout candle just yet. Let me see if I can find an example of that. Five minute, 5-minute, 5-minute. Here goes a decent example. Here goes a decent example here. So technically speaking, at this given point, all of these candles are pretty even here. You have a slight body close above the highs. The breakaway candle pretty much just following green candle here. So the 1055 candle. But what do we see here? Price ends up shifting back down. And then we ended up shifting back bullish yet again. Now, the real reason why we ended up going back bullish and honestly taking this short wouldn't have been really like a smart idea. Well, if you notice, if we come back to Friday and we go look at the daily candle, same setup. Trend was just tremendously bullish. So trying to short when the daily candle's green, the hourly candle's green, it's kind of almost like a recipe for disaster. Does the body of the equilibrium block candle play a role? Very small body or versus regular body? So here's the thing. When you have larger bodies on the equilibrium block candles, they are very likely going to have a lot more respect than, let's say, a very tiny candle. So here goes a good example right here. So technically speaking, here is an equilibrium block. However, if you look at this, this is only 75 cents. So with that only being 75 cents, I personally would not actually be interested in even taking that equilibrium block. Now, if you were to come here and look at this following candle over here, or even just come to the 10-minute time frame, because chances are these candles right here forms another equilibrium block. Actually, I know that for a fact because we ended up taking these longs here. So yeah, if you come here to the 10-minute time frame, notice how we actually had another bullish equilibrium block that formed. So the biggest thing is kind of paying attention to what time frame you're looking for the equilibrium blocks, and as well make sure you're looking at the higher time frames, because the higher the time frame, the better the setup. Anybody have any other questions? And as well, I hope that trade recap helped a lot. The biggest thing is you kind of just got to pay attention to trend. And if you are going to fight trend, make sure you're not too greedy. And if you are going to fight trend as well, make sure you're not over leveraged. Like a good golden rule for me, when I'm playing counter trend, I literally take 2 contracts tops. Based on his current price action, yes, ma'am. And if you look here on the 15-minute, I was kind of talking with the Menti 9 or 6 o'clock out the gate. If you look 6 o'clock out the gate, you actually had a really A plus setup, like A plus setup to go long. So come here to the 15-minute time frame. You should understand price is continuous. So what do we close here at 6:30, or not 6:30, 4:30? We have this bullish equilibrium block. What does price do? Come back into this range, gives us the retest, and we get the expansion up. Not only that, that same equilibrium block, remember how we talked about if you see 2 equilibrium blocks lined up, paired with each other, pretty much you're going to see the expansion. I know, Paul, I know. So yeah, pretty much 6 o'clock, once the market opened, it offered another A plus setup. 15-minute equilibrium block paired with a 3-minute equilibrium block, and now look where price is. And it's probably just going to keep pushing higher and higher. uh I locked in with the long at 724. Where's that at? Down here? Off the fair value gap. Okay. Good trade, good trade. I'm looking at this. Let's go see where your next PT could be. Well, honestly, we have no manipulation legs, to be honest, to really put out a standard deviation. I guess if we are going to do a manipulation leg, let's go ahead and do this one right here. So next up, 785. That'll be your next PT. Do you ever look at the new day opening gap or new week opening gap? Yes and no. I do look at the new day opening gap sometimes, but even then, a lot of times price kind of just comes back. And it also depends what market conditions you're in, because if you've noticed more recently, price is just extremely bullish. Like there's no stopping this. There's literally like yeah, like trying to short this is extremely risky. I'll be honest. It's extremely risky. So we can go find, let's see if we got an example here on a daily. So yeah, you got your daily. I guess you can consider this your new day opening gap. However, price is still looking to seek some more liquidity. That's why we're kind of getting an expansion back up. And if we were going to actually shift bearish, I think we would have done that today more than anything. Oh, Paul, you're funny. But yeah, that's a good point. Don't try to short this. If anything, trade the trend. What setup do you see right now, boss man? Your setup was 6 o'clock out the gate. That was the only setup you had. If you're not in that setup right now, I wouldn't be taking anything. Let's go find another new day opening gap. Okay, here we go. We can look at this one right here. This form one. No, it did not. Or is this just a weekend? I think it's just a weekend. No, we don't have a new day opening gap. Trying to find a good example here for you. But the biggest thing is when you are trading the new day opening gaps, you really just want to make sure that price is actually supporting it. And more times than not, with this recent price action within the past, like, I don't know, 4 months, pretty much, chances are if price does gap down, let's say it gaps down a couple points or something, very likely you're going to see price push back up to fill that gap and then get a body close back above that range and then see continuation back up. Any other questions? But yeah, boss man, we don't really got much setups. The only setup I'd say is, hey, ride the wave. Ride the wave until the wave dies out. You're very welcome, brother. I used to go take a look at SMCI while I got JJ on here right now. So yeah, JJ, my only other PT that I got, first trim was here at this gap fill. I mean, the only other drawn liquidity that I see on the daily time frame really is right here, 1012. Or 1014. And in order for a setup to really form, well, we have another equilibrium block down here around pretty much 700. Let's go find what time frame that came from. Looks like the 30-minute. There you go. Look at the 30-minute, right? Go ahead. Everybody mark this out on your chart right now. If price comes back here, overnight session, here's a decent opportunity to try some longs. Now, if price does not support these longs, well, what is that telling you? Price is likely going to come push back down, probably create a low, and where's your next imbalance? Well, your next imbalance is down here on the 30-minute time frame that you can potentially look to target at least 655. That's if this 30-minute equilibrium block does not hold up. However, I don't really like trading overnight session. I've realized I'm not the most successful overnight trading sessions. So I just wait till 9:30 out the gate to actually see price action that supports my edge. However, you probably do have a setup here. Silver gave you a really good setup earlier, pretty much before market close. Looking at silver now, yeah, you don't got anything on silver. Let's go look at GC. GC looks like we're retracing. I personally wouldn't really take any of these setups. I know NKD moves during this time. Well, yeah, there you go. NKD is we're out of here. So if you really want something to trade, trade NKD or trade NQ once you actually see a pullback. Besides that, I wouldn't be looking to touch anything. While we're here, I guess we'll go ahead and look at a couple tickers for tomorrow. Well, our 180 calls are about to be in the money tomorrow. Tesla's still going to the moon. Okay, we got to set up for Google here. Google inside day, Google inside 195. If you want to take Google, and if you're not in already, what expiration do we have? Google, we got July 19th. So yeah, we got another 11 more days for Google. I'm still just gonna hold on to these and ride the wave until the wheels fall off. But if you want to take this for a day trade, we have inside 195 and inside daily candle as well. And honestly, based on NQ's price action, really wouldn't be surprised that we gap up tomorrow. Call trigger, put trigger, PT1, 190. And past that, you're pretty much back into all-time highs. So with that being said, you just want to ride the wave until the wheels fall off. So we got Google up on the watch list for tomorrow. Meta could be a potential candidate. Let's see what the daily looks like. That's pretty ugly. Amazon stalling out. Microsoft stalling out. Yes, sir. It works on everything. What I teach is how to read a chart. It doesn't matter what you use. Shit, we could trade the bond market with my edge. It's essentially just reading the charts for what the charts are doing. Good example. Hey, if we come to the bond market, let's go look at a higher time frame here. All right. Well, I see a couple different setups that formed. Bond market is fairly ugly, but you still have a couple setups. Well, one, you pretty much have this change of state delivery equilibrium block. Price gives you the retest here. Where's your sell side? You got sell side here. You got sell side here. Even looking at this, you can see that the bond market even respects, or this is soybeans. This is not the bond market. Where's the bond market at? Ah, here we go. Well, soybeans respects it as well. I personally would not be looking to trade 10-year note whatsoever unless you're trading like a higher time frame. Oh, here goes another great example. Get your change of state in delivery. What do we always talk about? Once price fails to support the bullish equilibrium block, it's oftentimes going to retrace. Well, you got your retracement, and I'm guessing we took out some sell side here. Next sell side would be somewhere down here. Same thing. You can look at this little equilibrium block right here. Bingo. Where did price bounce from? Off the equilibrium block. Where did it go? Straight to take out buy side liquidity. Right here, we got to change the state delivery here. So now we're seeing that the, what is this, 10-year note is now bullish. Yeah, it works with everything. I would go look at Euro USD. Personally, I would not, I just don't like Forex anymore. Not a fan of it. And the main reason why is because you're trading price action like this. This type of price action is kind of pointless to trade. Because you really have to trade it off almost like the daily time frame. Because trading the lower time frames, there's so many times so where it's like, yes, you have the drawn liquidity, but chances are it's probably going to take weeks before it hits. And I'm not in the business to be sitting here for a couple weeks just to make a couple $1,000 when you can easily do that in a day on NQ. So if we look here, what do we got? We got an equilibrium block right here. Here's one on some time frame. There's another one on another time frame. So let's go find the time frames in which these came from, likely the weekly. Yep, here you go. So you got your equilibrium block also paired with this massive weekly volume imbalance. And there you go. You get your continuation back down. Formed the bearish equilibrium block, and now we're seeing continuation down. Did not, pretty much didn't give you the retest there. Yeah, looking at Forex though, personally not a fan of Forex. Man's about to trade for or soybeans. Hey, don't sleep on it. Don't sleep on it. If it trades anything like silver, there's some good money to be made there. So yeah, looking at NQ, we are just going to likely shift even higher. Boss man, trading is the easiest business on earth. Or I shouldn't use it. Yeah, it's the easiest business on earth. Any other business, you have a lot of the things to worry about. Like one of my businesses right now, I'm worried dealing with the marketing team, dealing with business developments, dealing with a lot of stuff right now. Trading, all you got to do is draw a damn box. That's it. So if you're that lazy to draw a box, I don't know if trading is for you. It's simple. It's what I used to tell a lot of my mentees. They'd be like, hey, I'm too lazy to draw a trend line. Then it's like, okay, if you're that lazy to take 2 seconds to just do this, I don't know. Maybe there's another business for you. And plus, you're working from your home, your phone. You can work anywhere. There's no reason to be lazy about trading. Study the equilibrium blocks, put in the work, and that's it. I'm in the group and it's very hard to follow. I think you're a great trader, but I'm lost. What are you lost about, Simone? And some trades I just can't control. A good example, the short that we took, shit, the moment I entered, it dropped. I did the trade recap on that already. I can't control NQ speed. I can just call out what I see. So change of state of delivery is when you pull the trigger. No, sir, that is not a change of state of delivery. Change of state of delivery is ultimately when something gets disrespected. So if we come back here, we could look at NQ. Pretty much why we went long here earlier this morning. If you look at the 1 minute time frame, it got chopped up this morning. I hear you. Biggest thing this morning, you kind of just had to be a little patient. So if you come here, look at the 1 minute time frame. Let's go back into replay mode. Right here, volume imbalances. So something you've noticed, if you watch the volume imbalance, it's almost like a POI to an extent within the market. The fact is that if price was going to be continuously bearish, you would have seen continuation down off of this volume imbalance, right? Play one candle forward. Notice what happens. We get a full body close above that range. That offered a 1 minute change of state delivery, and only a 1 minute change of state delivery. But you got to remember, we're also respecting the hourly equilibrium block. So now you have two different confluences that are kind of telling you to go long. 1 minute disrespected the bearish price action, offering the change of state delivery. Technically speaking, the hourly and the daily was all still bullish no matter what, just because this massive daily green candle. That's telling you, hey, go long. If you come here, let's go see. Let's go find another change. Oh, look at the hourly. So the hourly yesterday, we did form a bearish equilibrium block, got the retest, we took out sell side. That offered a change of state and delivery as well. And then what happened? Well, we got another change of state and delivery back bullish. Now, why did we shift back bullish? Because notice how we disrespected the fair value gap range. So IFVGs, those are also another form of a change of state and delivery. The reason why they're so powerful is because it's no longer respecting the price action. So if you were to come here, we can go back actually to Friday. Friday had a really clean 5-minute IFVG setup. Where was that? Right. Paul, do you remember what time that trade was? If you're still here, Paul. Oh, it was right here. Perfect. All right. So, and this is just in a fair value gap form rather than a equilibrium block. So notice here, we're bullish. This candle shifts back bearish. And then what happens? Notice how we get this full body close over this fair value gap range. So the fact is that that did occur, lets you know that, hey, price is now back bullish. So with price now being back bullish, that's offering your change of state and delivery yet again, because price is no longer supporting bearish price action. I'm having trouble to find the right NQ ticker. I use NQ1. NQ1 is going to automatically pull up NQU for you. I believe it's NQU. Let me double check. Yeah, it's NQU. So if you go to all, make sure you're on all or futures, either or you're going to find it. Just type in NQ and bingo. Now, if you're trading Forex, what is it? NAS 100, I think, on Forex. But look at the wicks. I hear you, Simone. I hear you. And that's why we are so patient with our trading, and why I continuously preach wait for the body close. You gotta wait for the body close, because if you don't wait for the body close, what's gonna happen? One, you don't have confirmation, and two, you're probably gonna get shaken out. That's just how NQ moves. But if you don't want to wait for the body close and you're kind of intimidated by the wicks, just trade ES. When I say ES is like the most rigged thing on earth, like very rigged, like tremendously easy to trade. and you won't pretty much run into as many wicks on ES compared to NQ. Like NQ's whole job is to pretty much shake out retail. So that's why I'm very, very patient with NQ. With ES, shit, I'll take not the best entries just because I know how ES trades like perfectly to a T. NQ on the other hand, you really have to be patient and let the trades come to you, because even if you know where price is headed, chances are can you sit through the retracement that NQ is likely to offer. So like, let's just say for this example, let's just say you went long up here, right, at 612. Do you have enough capital to sit through if NQ comes all the way back down to this range? And that's just how NQ trades. And as well, it's just going to come down with experience. The more time you're trading NQ, the easier it's going to get. And especially 930 out the gate, you're kind of almost like to expect wicks, especially on NQ. Today's price action, what I'd say, was a lot easier than last week, and the only reason why is because it didn't require as much patience. Like last week, we didn't get a trade set up till like 10:15 every single morning. Versus today, we pretty much got a setup, what, 8 minutes into the market? Or 7 minutes into the market open? So we got, what are we watching? Google. Any other questions here while I take a look at some common stocks to trade for tomorrow? Gonna hold off on coin. I'm gonna give it a second. Ah, HD, HD. All right. So I didn't put HD on the watch list, but I was watching it. Ideally, really wanted it to come back into the 786. If it did come back into the 786, pretty much all of our swing trades have been the same exact setup. Optimal trade entry, trend line break, and see you later. But HD, we do have a gap fill that gets completed up to 350. So this will be on watch coming into tomorrow. I guess the main two tickers that I'm actually looking at with actually clean setups are HD and what's the other one? Google. But pretty much HD, it already gave you your breakout today. So at this point, we are just trading the continuation up. SMTC, we'll look at that. When I see the swings, I don't see the expiration. Oh man, I post the expiration. I post the reason why you enter the trade, the reason why you exit on all of the swings, every single swing. There's not a single swing that I don't call out the expiration on. The only thing I don't call out expirations on is QQQ, and if you don't see an expiration, it's because it's a 0 DTE. And I think everybody else that's in the community can testify that I definitely call out the expiration. I'm looking at it. SMCI 719, $900 calls, swing trade. Are you a full-time member? I even call out what type of trades they are, whether it's a day trade, a scalp, a swing. If you go look back at premium alerts and you kind of just scroll through the alerts, you will see that I call out every single expiration, all of them. Yep. But the swings have been on fire lately. All right, so we got HD and Google. All right, you said SMTC. What ticker is this, JJ? Is this a tech company? This is a tech company with the massive gap to get filled. I like it. What's the options chains like on this? Is it liquid enough? Let's see, where are we? Did we come back to our OTE here? It looks like we at least tested 50% discount range. What is it? Good fib levels. Alrighty, so we came back to discount range and now we're getting an expansion back up. Hmm. Gap fill. Alright. Gap fills. Oh no, that is a gap fill. Okay. Where's 50% of this gap fill? Bingo. What is that about? 35. How do the contracts move, JJ? Spreads have been tight. One of the tickers I mentioned last week for 50% of the gap fill. Okay, makes sense. All right, so we're about almost halfway into the gap fill now. 50% of the gap fill gets completed at 35. Not bad. All right, so let's say we took weeklies on this. And we get 50% of the gap fill. Let's just say we take 35 calls and it goes up to, let's say, 35.7. How much are we making off of this? Are we making at least 100% for about a 2 point move? We do have a setup though on the 195 for it. You got your inside bar 195, pretty much a break above the call trigger. They don't have weeklies. Ah, I mean, honestly, I have no problem not trading weeklies anymore. I barely trade weeklies besides QQQ and SPX, to be honest. And I think that's the main reason why we haven't been losing on swing trades whatsoever, because I'm actually buying enough time now. Most of the other time with swings, I'd buy it on Monday, and then it's like, shit, if it doesn't make the move by like at least Wednesday, we're kind of giving back profits. But once you buy time, you really got nothing to worry about. All right, so call trigger over 34.18, put trigger below 33.76, pretty much break above the call trigger. We are gonna head up to about 50% of the gap fill, which was about 50 or 35.70. I was not marking. There's no point even marking this. We can just do this. Midline. Yep, so midline is 35, 35.55. Let's actually go check this on the options calculator. SMTC. $33.8. So if we were to buy, okay, so they have July 19th contracts. So pretty much we're looking at target 35 here. Currently going for 75 cents. So if this thing gets up to pretty much 50% of the gap fill by tomorrow, you make 113%. If it gets up there, what's Friday's expiration? What, the 12th? So looking at this, pretty much if we get up to 50% of the gap filled by Friday, you make 81%. That's not bad. Once we clear 36, that's where you pretty much make 100% no matter what expiration you have. Um, as long as we get it in by next week, the 15th, or next week, the 14th. I keep it on watch. And looking at NQ right now, hopefully we do get a pullback. Um, and if we don't get a pullback now, very much likely we could see a pullback maybe around 8 o'clock. Do we have data tomorrow? We got data at 6 a.m. Fed speaker at 9:15. Powell at 10. Fed speaker at 1:30. Okay, perfect. Glad you see them now. So yeah, when we call out pretty much these option swings, yeah, I post everything for them. And then if you don't see a chart for them, chances are it's because the charts are in the watch list and they came off the watch list. So you can just look back at the watch list to see exactly why I'm entering the trade. Um, yeah. And if you don't see CPI tomorrow, CPI on Thursday. Ha ha ha. Okay, okay, okay. And PPI on Friday. Oh, today's gonna be a great week, or this week's gonna be a great week. Pretty much, if you cannot necessarily day trade, the biggest thing is to stay alive until CPI. Because once CPI comes around, you're gonna see an abundance of setups, like very clean setups, the 5 minute, the 15 minute, the hourly. So yeah, for all of you funded traders, stay alive till CPI. And when CPI comes, you will make a substantial amount of money. Or if anything, I'd suggest probably get funded by CPI if you're not funded already. My suggestion would be saying to use Top Step or Apex, either or. How would you play that, JJ? That's crazy. I remember when Wells Fargo was at $40. Hey, yo, my boss man. All right. I see some of us got a lot of experience to learn in the market. But CPI is not a ticker. CPI is data that comes out. what is it? Consumer Price Index. Yeah, so CPI pretty much you're gonna see a lot of volatility in the market. It comes out 8:30 along with like most major datas. Um, so yeah, just kind of pay attention to the market at 8:30. I wouldn't suggest trading it unless you 100% know what you're doing and you're like 100% confident of where the market's going. Sometimes CPI is very, very predictable. Actually, most of the time CPI is very, very predictable. However, you do have to be looking at CPI on the higher time frames because if you are trying to look at CPI and gauge it based off like a 5 minute time frame, chances are I'll show you what's gonna happen to you. So if you come look at NQ, when was the last? I think what we had NFP last week, right? I think we had NFP last week. Yeah, we did. What day was that? The 5th. All right. So here's what CPI looks like, and pretty much all major data at 8:30. If you're on the wrong side of this trade, well, your account's blown. If you're on the right side of the trade, uh, you make a substantial amount of money. But let's just say you had a short entry down here or something like that. Chances are, even if you get in right here, because of how fast this candle moves in that 1 minute, you're probably still not gonna get taken out. So that's the downfall of CPI. Like it doesn't matter how fast you are, um, you're probably not gonna get taken out the trade. Yep. So with CPI, now this time CPI is very predictable. Like what was it? I came back to America. I think the 17th. It was like the 17th. You had like a really clean setup. Or what was the last CPI? Or the 14th. So if you come back to last month's CPI was fairly easy. Or was it NFP? One of the two. Where was this? The 14th. This one. Last NFP date. July 5th. No, anybody remember the NFP date before July 5th? June 7th. All right, let's go look at June 7th. So this one was a pretty easy one. The only reason why it was easy was because if you look at the price action and the biggest thing, I literally only had a sell limit. Now, however, if you do a buy limit and a sell limit, chances are you're gonna get torched pretty badly. But this NFP was tremendously easy because if you look at the price action, what do you notice? Notice how price is pretty much just in a consolidation phase. But not only that, look at the bigger picture here. We've gotten this massive expansion with absolutely no retracement whatsoever. So if you are going to absolutely trade NFP or CPI or anything like that, pick one direction. Do not pick both because if you try to pick both, you're going to get burnt pretty badly. I've tried to play both sides. It's worked out one out of like 5 times, to be honest. And then after that, it was like, cool, I got enough data to tell me don't trade it. Don't trade unless you're just gonna trade one side. So what do we have? So yeah, pretty much here, ended up having my short entry pretty much below this low. So let's just say you have a sell only. Um, and we pretty much got that expansion down instantly. Now, however, you have to be trading one side if you are going to trade data. Like, and if you don't get wicked in, take that as a blessing because if you do get wicked in, chances are you're on the wrong side of the trade. Um, That is very true, Simone. Very true. Yep. So when you are trading CPI, make sure it's lining up with the higher time frame setup. And yeah. And also, you have to understand where the drawn liquidity is. But right now, if you notice the price action, we're at all-time highs. You know, we don't really got a clear drawn liquidity. Like, at this point, the only focus is buy the dip until the dip no longer holds. JP Morgan's at all-time highs. So if that is paired with that, Powell says he can see some 0 DTEs moving in either direction. Okay. Honestly, hopefully, does any of these bank names actually go flat to where you can get an IV flush? Like when it comes to trading ERs, I think those are like some of my favorites to be honest, is getting an IV flush where the market does absolutely nothing and then it's like a Friday to where you know you can pretty much go off of what the data did and then from there you can make a substantial amount of money. Yeah, here goes a good example. I'm guessing they beat, but their guidance, yeah, they barely beat. But even then, notice what happens on his price action 9:30 out the gate, and this was also on a Friday. Pretty much these contracts were worthless. The reason why they're worthless was because ER absolutely did nothing. So if you pretty much were long or short, you got burnt. And IV got decayed. And once the market opened 9:30 out the gate, these contracts were probably worth like 2 cents. And once you got the push down here, an hour, maybe even less into the market, those contracts easily were up at least 500%. So that's about the best way I like to trade ER. Do you think it's too late for the AMD calls? Me personally, as a trader, I am the type of person, if I miss my entry, that trade is gone. If it comes back and gives me a new entry, great. However, if you look at AMD, if you're trading it on the time frames that we're trading it on, considering we have 180 calls and we're at 170, what, 179 pretty much. Personally, I would say you're too late. Now, if we, let's say you get a pullback maybe to like a new optimal trade entry. So let's just say you take this low from here. Let's say we actually retrace going into tomorrow. Let's say you come back into the gap fill, also paired with the 618 Fibonacci. Then I would say go ahead and take some longs off of like 163. But if you don't have a pullback and just, you know, you're kind of buying up here, um, that's a recipe for disaster. Yep, and if 180 was your target, well, we are damn near at your target already. So yeah, same thing with me. My first PT is coming up here at 183. It's buy side liquidity right here. Once we can get a close above that range, pretty much we have confirmation we're going to see more upside. At this point, we did just get our market structure shift as well. Once we close over this 174 range, we formed a higher low, got our market structure shift. We got a full body close above the high, which is signaling more upside. Yes, ma'am, exactly that. No pullback, no trade. And that's the biggest thing why all of these swings are just working out so perfectly is because we're entering on the pullbacks. Like SMCI, we entered last week, and look at where we opened up today. Amazon or AMD, we entered pretty much once we broke this trend line here, and look at where we are now. Tesla, shit, we entered all the way down here, and look at where we are now. Well, actually, Tesla, we entered at 140. 140, yeah. That was like our very first entry. And now we're back up here. Amazon, same thing. Amazon, we got in very early. Kind of just seen it off this. What was this? The 618. Pretty much accepted the risk and said, okay, cool. If Amazon's going to run, it's going to run from off this level. We just need confirmation here. Once we got confirmation, we pretty much 100% knew Amazon is gone. See you later. And now we're up here. We can go look at Google, same exact setups. Google, same thing. We entered off this optimal trade entry down here. Realized price came back to the 618, was respecting the discount range. We took the longs literally off of this low down here. And here we are today. So really it's the same setup over and over and over and over and over again. It just keeps repeating itself. Let me know, JJ. I think it's time to go ahead and put some money into a good ER trade. I haven't taken an ER trade in quite some time. But I will go ahead and get these watch lists posted in the community. Personally, I don't think I'm going to trade NQ tonight whatsoever. I'd rather just wait till tomorrow morning to actually take a trade. But we still have that 30-minute equilibrium block. As long as that 30-minute equilibrium block holds up, we should see more upside. I will see you guys tomorrow morning. You guys have a great rest of your night. And as well, thank you all for coming out and taking the initiative as well to keep learning and progressing as a trader. Appreciate you, JJ. Good night, good night, good night. You guys have a great night. I'll